Assalamualaikum and hello. My name is Mohamad Akif Hakimi bin Mohamad Nasir. My metric number is 2019829118 and I will present for definition of blockchain versus bank and conclusion.
Assalamualaikum warahmatullahi wabarakatuh. My name is Mohamad Hafizuddin Bin Rosli from BA1195D. My metric number is 2019855736 and I will talk about financial services impact of blockchain versus bank.
Hello, my name is Mohamad Faiz bin Hasmawi and my metric number is 2019 269 and 394.
Hi, I'm Nurin Allyssa Binti Mohamad Nizam from BA1195D. My metric number is 2019436792.
Assalamualaikum and hi, my name is Syed Muhammad Akif Aisy bin Syed Muhammad Khaizul and my metric number 2019609542 and I will be present the features of the blockchain and banks.
In this slide, I will examine the bank versus blockchain in Malaysia. What is a blockchain? Blockchain is a pass-on database that is normal among the centers of a PC execution. Store information electronically as a database with automatic plans. It might be known as fundamental occupation in a computerized money system. For instance, Bitcoin that is to stay aware of the protect and decentralized record of trades as another data came in and went into a new square. At the point when the square is filled with fixed data, it can tie onto the past block, which makes data merge together in successive solicitation. There are a few sorts of information that can be taken care of in blockchain, yet the most notable utilized so far as a record for trades considering the occurrence of Bitcoin. Blockchain is used in a decentralized way so that there will be no single individual or social event has control rather than all customer out and out hold control. Decentralized blockchains are extremely durable, which suggests that the data entered is irreversible. For Bitcoin, this infers that trades are forever recorded and recognizable to anyone. Next is the meaning of bank. As we know, a bank is a monetary establishment where clients can set aside or get cash. Banks likewise put away cash to develop their hold of cash. What they do is controlled by laws. Those laws vary in various nations. Individuals who work at a bank are called bank representatives. Certain banks manage people in general, and there are the ones in particular which a customary individual will manage. Different banks manage ventures and global money exchanging. Clients' cash might be put in the bank for safety's sake. Banks might give advantage to clients under a consent to take care of the cash to the bank sometime in the future with premium. A model is getting a home loan to purchase a house or loft. Banks likewise can utilize the cash they have from store records to put resources into organizations to get more cash flow. In many nations, the standards for banks are made by the public authority acting through laws. A national bank, like the Bank of England, change how much cash is given at a specific time. This is an element in the economy of a nation, and the public authority makes the important choice. this bank of issue take in and issue out coins and bank notes.
And now we go to the features bank and blockchain. There have the 9 features between those two. First, let's take a look at the banks first. With true account seizures, there will be, for a variety of reasons, KYC requirement allow legislators to quickly trace people's ledgers and retain the assets. Retain the assets contained inside them. Second is, for approved transaction, banks have the authority to prevent trades from taking place for a variety of reasons. Banks also have the authority to freeze accounts if necessary. Purchases made in unsuspected areas or for unusual causes may be denied by your bank. And third, with ease of transfers for difficult transaction, you will need the official identification, a PAN and a cell phone. 4 is know your customer rules. It means you have to know your customer. KYC methods are required for the financial balances and other financial goods. This means that banks are required by law to record a client's identifying proof before opening a file. 5 is privacy ban also. The customer holds the ledger data which is stored on the bank's private servers. Financial balance protection is limited to the bank's servers and how well each individual client receives their own data. If the bank's server were to be hacked, the individual's information would be compromised as well. 6. Through the security, accepting the client entails putting in place strong web security measures such as using secure password and two-factor authentication. A ledger's data is almost as secure as the bank's server that hosts the customer account information. 7 is the transaction fees, card installments. This cost varies depending on the card and isn't paid in the whole by the client. Stores pay expenses to installment processes which are generally levied each exchange. The impact of this fee can sometimes cause labor and product costs to rise. Checks can cost somewhere in the range of RM4 and RM30 relying upon your account bank. ACH move can cost up to RM30 when shipping of outer records. Second is wire. Outgoing homeground wire moves can cost as much as RM25. Active worldwide wire moves can cost as much as RM190. And last, transaction speed card. And the installment 44 hours, checks 24-70 hours to clear, ACH 24 hours, 84 hours, wire winning 24 hours to accept if global banks move are normally not handled on the ends of the week or bank occasions.
Financial service impacts of blockchain versus bank. The international banking system is well known for service as a reliable third party in the provision of transaction services, transfers, and financial loans among other services. They frequently retain an internal ledger, which causes trust problems in the banking industry. Third parties such as banks will no longer be necessary to authenticate transactions if blockchain technology is employed in the financial industry, making transactions more transparent, trustworthy, and borderless. All transactions on the blockchain will be carried out via a peer-to-peer method, which will be faster and easier than traditional banking. The benefits provided by blockchain make the technical solution a trustworthy, highly secure, and important alternative for banks and financial institutions. Some of the financial ramifications of blockchain technology are as follows. For the first is transaction transparency. Transparency is crucial in determining if a product is Sharia compliant or not. Blockchain has been discovered to be cost-effective, further boosting transaction transparency. Transparency of blockchain transaction may be assured since the transaction data will be disseminated on a computer with a blockchain network that is identical to the data accessible on the individual completing the transaction. Data in the blockchain network can only be updated by agreement or consensus among all computers in the network. As a result, blockchain technology ensures data protection against third-party hacking. As a result, blockchain has the potential to boost investor confidence and boost the country's economy. Federal platform for endowment purpose may be used to evaluate the efficiency of blockchain technology. A successful blockchain increases transparency, lowers mistakes, enhances management quality, and makes it more efficient in the long run. Blockchain technology standardizes financial procedures and give all network users access to a single source of information. A shared distributed ledger allows certain parties to access transaction data at any time. Meanwhile, the blockchain system that record and secure transaction data provide a high level of transparency on a large scale. In addition to providing transparency, blockchain also provide privacy characteristics that may be used to facilitate selective data exchange between firms. Okay, for the second is security. In terms of our data, traditional banking uses a centralized internal ledger to keep all data, including transaction history. The data recorded by the bank may be shared by institutions and users if the system is exchanged with a distributed ledger using blockchain. In a centralized internal ledger, this is impossible. As a result, the chance of unscrupulous person accessing or modifying payment data or keeping transaction detail will be reduced. More significantly, the incorporation of this technology into the financial system will eliminate the need for middlemen to keep data. The next point is reduce cost. International transaction will be charged by the financial services, which is the bank under the traditional banking system. The transaction will be routed to the central bank, which will then send the funds to the local bank. As a result of the existence of a blockchain, transaction will take place directly between parties without the need for intermediaries. Consumer profit from the technology, but banking institutions may also benefit from blockchain adoption. According to a research, the technology is predicted to save banks and financial organizations between $15 and $20 billion in infrastructure expenditure by 2022. Banks, for example, can cut interaction fees with intermediaries and counterparties by adopting smart contracts.
So I will continue on the same topic about financial service impact of blockchain versus bank. I will start with improved data quality. The blockchain network is built to handle a large number of transactions, while also allowing for interoperability across different chains in the blockchain. resulting in better data throughput and quality. The current data storage method in banking demonstrated that an institution's likelihood of changing data is considerable. Not only that, but because they hold the data, it's not impossible for the information to become outdated, incomplete, or misappropriated. Despite the fact that every financial institution or bank has information management, the aforementioned challenges are not unheard of. As a result, the blockchain security and transparency further must be modified to meet the problem. Next is programmable. A smart contract is a code that is distributed over a change of letter and number. The term and condition for a smart contract are usually much more stringent than those for a legal contract. Smart contract execution on the blockchain allows producers to execute automatically. Some tasks that have been instructed will be complete using smart contract if they meet certain criteria. Besides efficient payment, blockchains can increase payment transparency, efficiency, trust, and security while cutting costs for financial service organization and user. Payment between banks used to take up to a week to send. Now, owing to blockchains, they are completed in minutes. The use of digital currency and contribute ledger technology make payment quicker, cheaper, and more convenient. Central banks have been experimenting with distributed ledger technology for improved payment. Blockchain save a significant amount of time and money for all parties involved. Because payments are processed quickly, it has also removed the need for middle and back office staff. Next, quicker settlement in stock market. The potential of blockchain technology to deliver near instantaneous stock settlement by lowering transaction time and cost is being investigated by major stock exchange. It used smart contract to automate compliance while also increasing security and transparency. The Nasdaq employ blockchain technology to issue and share private security, while the London Stock Exchange is working with cross-industry organization to look at how blockchains may revolutionize the way security and exchange in Europe. Other major stock exchanges are looking into the blockchain possibilities. Last but not least, free and fraud claiming management in insurance. The application of blockchain technology in the insurance industry has been continuously improving. By automating claim sorting and processing, smart contracts are benefiting the insurance industry. The claim settlement process is being improved and secure via cross-industry data interchange, simple access to client history, and centralized consumer verification. For example, manual claim settlement necessitates communication between a number of stakeholders, including the customer, brokers, insurance, and bank. In this interaction, cross-checking, reconfirmation, and other procedures are performed, resulting in time loss and efficiency. Blockchain establish a secure network between these parties, allowing them to interact in ways that reduce inefficiency and streamline the whole process. Blockchain is a distributed ledger system in which everyone in the network.
So my part is risk of joining blockchain versus bank. Similar to the preceding definition of blockchain and bank on page 4, the blockchain and the bank use distinct system, with the blockchain being a decentralized system and the bank being a centralized system. The term decentralized system refers to a system that is not centralized. There is no central server, system owner or controller. It is also not the same as a bank, which has a system owner, a central center and a system controller. As a result, the danger varies depending on the system. Everything that involves a transaction has a risk. The type of risk and the likelihood of risk are the only things that differentiate it. We will look at the hazard. We will encounter why combining blockchain and a bank in this article. So, there are 4 main risks of the impact of blockchain on individuals and organizations, which are general risk, security risk, development risk, and legal risk. For general blockchain risk, its component contain is difficult to merge protocols, standardization is lacking, cryptocurrency has a low value. Okay, next, security blockchain risk, human-related risk, risk with public and private key, vendor risk, and untested code. For the development blockchain risk, high energy demand, data privacy legislation, and the last one is legal development risk, data privacy jurisdiction and dispute resolution, and regulatory risk. So, because there is no central system and system owner and their system employ more technology or device, blockchain poses a higher danger of personal data being taken by hackers. Customer data is not protected only because blockchain employs exceptional security, such as the LTS. To safeguard their data from being stolen, users must, for example, after their gadget on a regular basis and install excellent antivirus protection, because the Android system is vulnerable. Hackers will have an easier time to stealing data from customers who utilize it. To summarize, investing in blockchain is far riskier for business than it is for people, since small businesses are concerned about security, legal and development risk. Banks are also vulnerable but to broader risks such as market risk, which affect the financial market, such as stocks and bonds, where fluctuations in interest rate have a significant impact on profitability. Banks have low investment risk because they use a central system that ensures that customer data and money are protected at all times. Bank is also a great option for business looking to invest. The larger the profit, in my opinion, the riskier it is for us to invest. There is no question that blockchain is a terrific fit for us if we are excellent at market investing and safeguarding ourselves from hackers. Blockchain has the potential to make us wealthy in a short period of time, but it is extremely hazard and it depends on if individuals are prepared to accept any risk. In my view, the bank is a very secure place to invest, even though the reward is not as great as the blockchain. The risk is extremely low, and the bank has a policy of safeguarding customer data, as well as staff who are always looking after the client system. For the future, we can put money into investment banks like ASNB. Finally, the original slow safe has been released.
Finally, we can conclude there are several differences between blockchain and banks. We can notice the influence or impact of both in financial services and also distinct dangers when investing based on the properties of blockchain and bank. Blockchain and bank both offer benefits and drawbacks that must be considered in light of current economic conditions and threats. Individuals or organizations must decide what is best for them. Both are excellent investment opportunities for us. That's all. Thank you. Assalamualaikum.